Now, the disrespect of Overstock is nothing short of crazy. Overstock's price continues to decline as the business continues to make strategic decisions in this tough environment that's going to benefit their future operations. And at $17 a share, I'm going to break down exactly why this is undervalued, and we're going to figure out just how much value is in this company. Now, Overstock reported full year 22 earnings as of Feb 22nd, so all the numbers are fully up to date. And at 800 million market cap, we can see they have 370 million in cash, and that's fully up to date. And as a business that is free cash flow positive, even if it's not producing a lot of cash in the current environment, we can then also look at adding the blockchain empire into the assets on the balance sheet, and then we can see just how undervalued this business is potentially. But first, let's talk about Overstock's competition, because I think this has some huge updates, especially when we're going to talk about Wayfair, as they recently reported earnings as well. So Wayfair was down 2.78% yesterday, and stock plummeted 23% the day after the company released its Q4 earnings and full results for 2022. Now, its dramatic drop in earnings prompted investors to dump shares of the Boston-based furniture and home retailer. Additionally, the massive losses and worsening trends in its business points to some serious challenges for the internet and direct marketing retail stock. Now, for the 2022, the revenue of just over 12 billion drops 11%, which, considering Overstock's was around 30% loss, that describes that there could be some potential market gain in Wayfair. But this is why I think it's very unusual that a company that is actually losing less revenue is actually losing market share with Overstock. So ultimately for Wayfair 2022, losses spiked considerably higher, with the company losing 1.3 billion. That's a tenfold increase compared to 2021. Operating expenses also surged 20% higher as revenue levels dropped 11%, of course. That news led to selling that wiped out nearly all of Wayfair's 2023 stock gains. The shares are down nearly 90% since hitting their all-time high at the beginning of 2021, and Wayfair has severe troubles. That shrinking customer count and financial losses place tremendous strain on the company's weak balance sheet. As of the end of 2022, Wayfair held just under 1.3 billion in liquidity when we consider their short-term assets and cash on hand. This is slightly less than its losses in 2022, implying the company has just under a year left before it either has to seek outside funding or inevitably bankruptcy. Now, I think this is a largest part because when we're talking about a company that could potentially go bankrupt with 12 billion in full year revenue, that potential market share gets put up for grabs, and that's where Overstock is in a fantastic position to gain that market share. So to add, when looking further into their balance sheet, we can see a large amount of revenue was determined through their ad spend. We can see over $400 million in cash that was spent on marketing expenses alone. Now, if they were to try and cut costs in this particular section, that could cause revenue to collapse massive and widen their losses even greater. And that would make the business either become a much smaller company than it's currently worth, and even if they were to get to profitability, again, it would be much smaller than it would be. And that would only increase the amount of pressure on the stock due to the high amounts of debt they currently have on their hand. Now, Wayfair is number 2 in the space, and with Overstock at 3, when this company comes tumbling down, that market share will get taken, and Jonathan Johnson has already mentioned that on the conference call, and that's what makes it so exciting. He's clearly anticipating Wayfair's downfall, and he's like a hungry shark waiting to bite up those pieces. Now let's talk about our second competitor, Bed Bath & Beyond. Another one destined for failure when we're talking about Overstock's competitors. Now, Ayla's announcement of a plan to stave off bankruptcy through a dilutive capital raise, its fate is largely sealed for Bed Bath. The company is raising the funds from Hudson Bay Capital Management, another institutional investor, but not only is this deal very unfavorable to existing shareholders, it may not even be complete yet. Now, if that happens, the company will again need to scramble in order to keep the lights on. And with this wipeout risk remaining high for bankruptcy, that leaves Bed Bath & Beyond in a terrible position. Now, even if they've secured financing, it's questionable whether or not this will even lead to a turnaround. Now, given these bleak prospects, one thing is clear. While shares trade at low single digit at $1 a share, the debt levels are sky high for Bed Bath. So they're far from a bargain, and this is another business that Overstock will be taking market share from. And Jonathan Johnson believes this could potentially increase Overstock's revenue double, and I'm talking double. If we take 10% of market share from either Wayfair and Bed Bath, that doubles Overstock's revenue. So now we've talked about a bit of Overstock's competitors, I want to get into the retail business of Overstock. I'm going to expand a little bit further from last video, and the reason why I think Overstock's low inventory model is so effective, not only in the liquidation sense of capital in a recession, but it also allows Overstock to partner with more vendors. And with Wayfair and Bed Bath struggling to pay their suppliers, this opens up greater avenues when we're talking about loyalty from other suppliers to support Overstock, because they know they're going to get paid using Overstock's services. So JJ stated they now have 4 million SKUs, and with the transformation into house furnishing niche only, Overstock is stealing market share in that environment, which is unheard of for a retailer that's revenue was down over 30%. We are stealing market share. Now, in the full year presentation, we can see they executed another 20 million in buybacks, and they still have another 20 million remaining, totaling the 100 million. This gives us more of the pie as a shareholder, and that benefits us massively. And I have a full video breakdown of buybacks, which you can watch on the top right corner. So as we can see, Overstock has been compiling strategic decisions that are enabling greater performance for future. When we're talking about greater buybacks now, then we're talking about greater SKUs. We have huge cash on hand in 370 million. And then we also have this light inventory model, which is killing its competition in Bed Bath and Wayfair. And that leads greater revenue for future Overstock. But by far the biggest part in Overstock's is the Medici Ventures portfolio. And we were able to see the future rounding funds of what Overstock have been doing over the last 2022 year. And we can see that the largest part was down to T0, Bit Global, GrainChain, and settlements. But in today, we're going to be talking about GrainChain, because there's been some recent developments, and I'm going to break down why I think this is a company that we weren't expecting. But with the recent rounds, we can see that there is another potential that we as Overstock holders and shareholders are going to benefit from this. Let's talk about GrainChain specifically, which is digitalizing the agricultural supply chain, and it closed an investment round of $29 million. So Overstock participated in the latest round alongside Pellion Venture Partners and some others. So of the capital injection, Overstock deployed 10 million through a convertible promissory note, and Pellion tapped its flagship fund series to make a $10 million investment too. So GrainChain integrated fintech tools into its smart contract solution to enable new liquidity options to farmers and offer prompt payments upon delivery of commodities. This includes the ability to create lean instruments, deploy and manage capital, add insurance products, monitor and track farming operations, and facilitate repayments of funds. Now, our ownership in GrainChain was estimated at a roughly 20%, and with this new round into GrainChain, as a shareholder, we do get diluted as it states as a higher valuation. Now, even if we own 10 to 15% still, if the valuation has increased from, let's say, a 50 million valuation to a potential $200 million valuation, we might have gone from owning $10 million of the company to now $20 million of the company, let's say. Now, this is all speculation on my part, and we don't actually know the full valuation. But when we consider just kind of the massive amounts of deals that are going on, and at a $29 million valuation, I don't think it's out of the possibility that GrainChain could be valued at a $200 million valuation. This has also been the case in terms of valuations for Bit, T0 settlements when we're talking about recent fundings. And as stated before, this is all currently valued at 300 million in Overstock's long-term assets on the balance sheet. And Wall Street is valuing all of these assets of the Medici Ventures portfolio at zero. And now with the opportunity only getting better and these companies are slowly maturing, they're commanding greater valuations and Wall Street haven't caught on yet. And that gives us as a shareholder fantastic upside when Wall Street is unaware of potential estimations and valuations in the Medici Ventures portfolio. So valuations of these companies will either be realized through the sale of a company, whether it's an IPO or a private sale. And that either goes directly into Overstock's cash position, whether it's a private sale or whether it's an IPO, we could potentially get shares in a spin-off, translating into equity of that particular business. So you can see just how many ways we can win as an Overstock shareholder with these Medici Ventures assets. So I think one thing to massively mention in this video is the performance of Overstock as of late. It's no secret the performance of this stock has been very poor, and this can be largely put down to the Fed raising rates and impacting a full seizure of the housing market. It's not ideal, however, when we consider this company has made it through times such as the 2008 financial crisis and also the tech bubble. When Overstock comes out of this period, my expectations are Bed Bath & Beyond and Wayfair are either going to be much smaller companies or they're going to be bankrupt. Now, this leaves Overstock in a much better position, as I stated in my previous video, and this also allows me to expect that share price will eventually reflect that performance in the future. Now, with these strategic decisions that Overstock is making, and with the Medici Ventures portfolio slowly maturing, we're going to slowly start to see this impact share price. On the conference call, Jonathan Johnson mentioned how it was going to be a tale of two halves to the year. And I tend to agree with his outlook alongside the tough macroeconomic environment. It's also a highly promotional environment, and that's currently weighing in on Overstock's revenue performance as of late. Now, as mentioned, Wayfair has been pumping in $400 million a year in terms of marketing expenses. And as an Overstock shareholder, we can't expect to compete with those amount of marketing costs. But that also leaves us in a great position in the future, because once Wayfair's marketing expenses have to come down due to the save costing methods that they need to impact, otherwise they will be going bankrupt faster, that leaves market share for Overstock to take in the future. It's just a tale of being patient, and while the next 6 months could be very painful, I think the second half could be a great improvement on all of these areas. So the second half expectations are improvements on all these areas for Overstock, and especially with the loyalty program in place now, this should hopefully help drive greater market share for Overstock from its competition. And that allows Overstock to expand into the new assortments, which will drive revenue in the second half of 2023. Now, if you guys enjoyed this video, make sure to leave it a like, comment your thoughts on the new round of GrainChain and T0 and Bit Global, and make sure you share to friends so they can be aware of this amazing opportunity. So I'll see you guys in the next video, and I'll let you know any further updates for Overstock, and cheers for watching. Thanks.